Hey guys, what's going on? Welcome into the video. So we had a great rally in the market last week with the major indexes being up about 6% and up about 9% off of lows. So now the question presents itself, did the stock market just bottom? Let's get into it. So just like everybody else, I'm crossing my fingers that we did bottom, but I do think that it's important not to get too bullish yet. First off, the market is still in an overall downtrend, and potentially what we saw last week and into this week is a bear market rally, such as what happened back in March. So I personally always look at and track the SPY, which is an ETF that tracks and indicates the S&P 500 to get the best outlook on the overall market trend and direction. If this ETF is bullish, then the majority of individual stocks will be as well, and likewise bearish. So the SPY had a strong breakout out of the falling wedge. We talked about this in last week's video and has had a pretty extended move since. It is now testing a strong resistance level at 415 to 416 and has some more strong resistance levels above, with the key level being at 427 to 430 range. So if the SPY can break and hold above 430, that would personally give me confidence of a bottom, but there's a lot of questions still and a long way to go on a technical basis. So the definition of a bear market rally is a sharp short-term rally in share prices amid a longer-term bear market decline. Bear market rallies are treacherous for investors who mistakenly come to believe they mark the end of an extended downturn. As the primary bearish trend reasserts itself, the disappointment of those who bought during a bear market rally helps to drive those prices to new lows. Bear market rallies are also known as dead cat bounce or a sucker rally. So these rallies always have investors believing that the bottom is in, and that's what makes them so tricky. So for example, I, like many others, thought the bottom was in when we bounced off 410 on the SPY and rallied all the way to $460 in late March to early April. But that of course turned into a bear market rally, which resulted in the market going right back to the downside. What we are seeing now, in my opinion, is the start of another multi-week rally, but I still am cautious on going all in per se on bullish positions. So getting into some reasons why we should still be cautious in this market. Last week, the inflation numbers did take a step in the positive direction, with PCE core numbers coming in right below expectations, which is a great sign, but we still have the heavy majority of issues that sent this market down in the first place still here and potentially getting worse moving forward. Naming a few of these issues, the Fed will begin quantitative tightening on June 1st, which will amplify the contractionary impact of higher interest rates, aka a very bearish factor for the market moving forward. Altogether, major central banks might withdraw up to $2 trillion in liquidity from the global economy over the next year. This would amount to roughly 20% of the combined asset purchases of central banks since the beginning of 2020. So of course, all the money that was flooded in the market since 2020, they're now retracting that money and taking liquidity away from the market. There is also a lot of bearish option activity going on as well. For example, according to Spot Gamma, Friday was the largest negative delta day on the SPY in the last 30 days. This implies that traders sold calls and bought puts as the market trended higher. For those who aren't familiar with options, calls are bets that the market is going higher and puts are bets that the market is going lower. And there was also quite a bit of massive put option orders coming into the index as well late on Friday. So all of these orders that I'm showing now, these were all orders placed in the last 30 minutes of trading into market close, and a few that came in the after hour session. And while we do not know the reason behind these large buys on puts, for example, they could be a hedge position for funds that are net long the market and just puts for protection, but the option flows still show that there is plenty of pessimism in our current market, and there are bets coming in that this is just another bear market rally. Also, while this rally has had a lot of strength so far, it's not necessarily backed by heavy volume just yet. For example, looking at past crashes, the market always bottomed with heavy volume. Here is the 2020 COVID crash, here is the 2018 crash, here is the crash in 2011, and here is the great financial crisis in 2007 to 09, and finally the early 2000 tech bubble. Comparing all of those high volume bottoms to now, there are not really signs of that high volume capitulation bottom that has happened at the end of crashes historically. Bear markets have also historically bottomed with the VIX at or above 50, which is also an indicator for capitulation, something that this market has just not yet seen. Now, just because all of these things have happened in the past does not mean that we absolutely need them to happen now for this stock market to bottom, but a very dangerous sentence is this time is different. History does not always repeat itself, but history does rhyme, and that is something to be aware of in this market. And the final thing is that the crypto market is not following the pump in stock prices. Now maybe we have seen a full divergence between crypto and stocks where they no longer follow each other's price action. In the past, we had seen Bitcoin go up and then the Nasdaq and the S&P would follow that. And likewise, with the indexes going up, Bitcoin would be correlated with those prices. We are just not seeing that now. Now maybe they have fully decoupled from each other, but this is definitely a cautionary sign because crypto going up is an indicator of risk on buying for investors, and we have not yet seen that. Maybe we see this next week, something to be aware of and keep an eye on, but the Bitcoin price action does look bearish as of now. Maybe it will be different when I post this video, but it is important to watch Bitcoin and whether it does break down here out of this tight consolidation or it breaks to the upside above here. If it does break to the upside, that would definitely be a bullish indicator moving forward. Now, on the other hand, giving a bullish argument, this chart shows each time that the S&P 500 gained over 6% in a week and the future index moves that came afterwards. As we can see, the heavy majority of the time, market performance after weeks like this have been historically very, very bullish, with the average gain being 5.6% after 3 months, 12.5% after 6 months, and 21.7% after 12 months. Alright, so let's talk about my prediction for the market and what I personally expect going forward for the market in the next few weeks. Now, I personally think that this rally does have more upside in it, but I am trading it with caution. So starting out, using the S&P futures, for example, on the 4-hour chart, the indexes are very overbought after this recent rally. So before anything, in my opinion, we will either need a pullback or some consolidation before this market goes higher. As we can see, an overbought RSI indicator on the 4-hour chart is a bullish indicator, but it almost always results in a pullback first, what I personally expect to happen early this coming week. If we get a day or two of a small pullback or consolidation, in my opinion, that will set up the market for the next leg up. And as long as the SPY holds above 405 to 407-ish, I am personally short-term bullish and expect more upside. But if it does break back below 405, that is when I would exercise caution and potentially look to play the downside of the market. So as long as 405 doesn't break, I am short-term bullish and expect upside next levels at 418, which is the 23.6% Fibonacci retracement from COVID lows. As we can see, the market so far has bottomed off the 38.6% retracement at $380 per share. We talked about that level in last week's video. So then if it can break above 418, 420 is next, which can result in a test of the 427 to 430 key range of resistance for the next leg up. 430 is the biggest level that I'm personally watching. This is the resistance that rejected 3 different times between April 25th and May 4th, which sent the market for the next leg down and has had a ton of reactions when tested over the past few months as well. So if SPY can break and hold above that, it would give me much more confidence for the market. But for now, I am trading with the mindset that the 430 level of resistance is the line in the sand until it is reclaimed. So I'm personally trading with the mindset that we get to 427 to 430 on this rally and expecting a rejection there. If we do break higher, I would change my mindset on the market from there. Ideally, we see something like this where there's a healthy pullback early next week before breaking above 415 to 416 up towards that 427 to 430 level before deciding direction from there, which either has a hard rejection or a further breakout for more upside. As long as this rally does hold though and doesn't break below 405, that level that I was talking about, it should give us some great trading opportunities for the next few weeks to play the upside on this market. But make sure to be ready for anything on this market. As we've seen over the past few months, just a single thing of news can change this market on a dime. Be ready for anything and be prepared and ready to trade any different scenario that comes up. So that's my personal thoughts and opinions on what to expect from the market moving forward. Of course, always have your own plan before any trade you make. I'm of course not a financial advisor and this is not advice. So hope everybody had a great Memorial Day. Thanks so much for watching the video. For anybody interested in joining the private Discord chat, that is the first link down in the description. Make sure to hit that like button and subscribe button if I did provide some value to you in this video. I would greatly appreciate that. Leave me a comment down below on your thoughts if you think this is a bear market rally or you think the market has bottomed and we are on the way back up to new highs. So I'll catch you guys next time. Thanks so much for watching and have a good one. Peace out.